In this video lesson, I will give you several reasons why to trade on the Forex market. You'll see what is the difference compared to the other markets, what are the benefits for a trader compared to other markets, and also what you will find on the Forex, when the Forex is open, when it's closed, what are the benefits. Here on the left side I have created an article on this topic. You can find this article on the getnotrading.com website. Here on the right side I have put a gold against US dollar chart on a 1 minute time frame with a demo account with around $80,000 as a account balance, just to show you some of the examples during this video lesson on this topic. Now here are those reasons. Maybe there are other reasons, but I have gathered all of these just to show you. Maybe in the future I will add more of them. If you have any of more reasons, feel free to leave a comment with those reasons so we can also discuss about them. Now, first of all, there are no commissions. They are broker that will not charge you any commissions. So that means whenever you open the trade, they will not give you some kind of a fixed commission that you need to pay, but most of the time the broker gives you a spread, and that means the spread is between the two prices, which is one of the bid and one is the ask price. You can see this red line is ask price and the gray one is bid price. So you can also check on my YouTube channel the playlist where you will see what is the bid and ask price, so you can go there and check more details. But this difference between these two prices is the cost that you will pay whenever you open the trade. So most of the brokers in the Forex market are charging a small amount of fee, you can say that, which is called a spread, and that is the difference between these two prices whenever you open the trade. So when you start trading, immediately when you open the trade, you will be in minus for this amount. So there are brokers that will lower this difference so small that some brokers, they will give you without trading without the spread. For example, on the Euro USD, let's go to a 1 minute time frame. You can see that when I go here, there is a show ask line. There is no difference between the bid and ask price, which means this broker do not have any spread. So this broker currently on a demo account, which I currently using, have some kind of other cost, and in this case this could be also a commission. But this is one of the reasons why trading on the Forex is one of the better things, because they charge you a spread which will be fixed or it can be variable, which means this difference between these two prices can be fixed all the time. So you will know what is the cost of opening the trade. This cost will be taken immediately whenever you open the trade. So if I open this trade, it will be in minus, but this is something that you can also test on yourself. There is no third party. You are not having anyone between you and broker. You're not paying any commissions or any cost to go on the Forex market. The broker here on the Forex is some kind of middleman between you and interbank market, which is also the market between the banks. But this is enough. There is no, for example, a middleman that will charge you some kind of a commission just to open account with your broker. This is completely not needed, because, for example, if you are trading on the stock market, in order to get to the stock market, you need to have a broker that will give you the tools to trade on the stock market. In this case, we are trading on the Forex market with a broker which is similar to the stock market, but it is not the same one. So there is no middleman that you need to pay to waste more money just to enter into the market. Trading on the Forex is completely without fees. You can see that the fee the broker takes you is very, very small, so it is very open, and it is also very it is approachable, if I can say that. So it can be very easy to start with. Then you have possibility to decide what is the lot size, and the lot size represents when you open a new trade. This is the volume. Volume is set to 1, and this is also called lot size. The volume or lot size is the same. Now, whenever you open the trade, you can see how the price change. This price change can be defined how much it will equal to. So, for example, whenever the price change, for example, from 68 here to 78, this can be equal to $10 or $1 or $100. This is defined by the lot size. If the lot size is higher, larger, this means that this price change, when the price goes from this price level to this one or to this one, can be much higher or much lower, depending on how much risk will you take on this trade. So this is something that is used in Forex trading, which allows you to quickly define how much money you can make or lose. This is decided by the lot size. This is very important and also very good that you can define whenever the price change for this small amount of money, you can earn $1,000, but you can also earn $1 or $10, depending on you. Then you have low transaction cost. This is something that I have already explained, and that is the spread. The spread can be very small. That means whenever you open the trade, this cost that you will pay for opening the trade to the broker will be so low that you will not pay attention to. But sometimes there are brokers that can give you this price difference so high that you will not open the trade on that trading symbol, because the cost will be too large and it will not make any sense to trade on that symbol. Then you have 24 hours per 5 days during the week. So from Monday to Friday, the trading is open. You will see that here. You can see these are the trading session. So this is when you can trade. On the Forex market, on a weekend, the market is closed. It is the market starts from Sunday in the morning. This is the European time where I'm located. In the morning, it will be on a Sunday, I think it is 11 in the evening, starts, and closes on a Friday around 10 or 11 in the evening. So you can see 2 days over the weekend, Saturday and Sunday, until 11 o'clock in the evening, the market is closed. Then you have no one controls the market, and you can see how this looks. Here are the New York Stock Exchange. This is the Nasdaq, and this is the Forex. You can see what is the market comparison, how much billion of US dollars is the daily turnover. So the Forex market is highly volatile, and also there is lots of money compared to the stock market. So no one controls that large market. There could be traders on the stock market that can control the market by buying or shorting the stocks. That could influence on the traders. On the Forex, it's much harder to control the market. I cannot say there are no banks that will some kind of influence on the market conditions. There is, but it is less likely to have such large impact like on the stock market. So no one controls the Forex markets, which is great. A different leverage, which means it is very close connected with the lot size, and that means if you have a large leverage, that means you will be able to open a large lot size, which means the price difference whenever it changes can be set to, instead of, for example, if you have a small leverage, a price difference like this could earn you $1. But if you have a larger leverage, which allows you to open a large lot size, a volume, this amount can be equal to $100 or $1,000. So this is the different leverage. Then you have high liquidity, which means whenever you start trading on the Forex market, the market is running. You can see it is jumping down and up and down, up and down. Now, if you go somewhere else, just a minute, I need to show you where that is. Let's go to the 1 minute time frame. For example, like in this example, here you can see this is not a volatile market. There is no liquidity. What that means? That means the price is not going up and down. Like in this example, it goes up, then it goes down, it goes up, and it goes down. In this case, you can see the price has moved slightly up and down, which means you're not able to trade that. So when the market is not volatile, there is no liquidity, the price do not change too much. So whenever the price do not change, you cannot make money, because whenever you trade, that means you predict, will the price go up or the price go down? If the price do not go up and down, the price go on the sideways, you cannot make money. You will stay inside the trade, and you will sometimes be in small loss, small profit, small loss, small profit, and it will not be worthy to continue trading. So high liquidity will allow you to enter into the market at any time, and you can make money or lose money. Pay attention to that. Then there are low obstacles to enter in the Forex market. The only obstacle is to find a broker. You can start also trading without the broker. You can simply download MetaTrader 4 from the internet, and then you can start trading on a demo account, not live account. For the live account, you need to have a broker, but on a demo account, you can start without the broker. I also have an article written here on the website, but also on the YouTube channel. You can see how to download MetaTrader 4 without the broker, and you can start trading. You can open a demo account without the broker. So there are low obstacles. You can see you need only a smartphone, tablet, or desktop computer. You need to have internet access because you need to have this data on your trading platform from the service. Then you need a mail address. We can also use some kind of a dummy address with a demo account, but with the broker you will need to give your documents so they can open an account for you, because if you are using a regulator broker, you will need to give documents to be verified. And then you need to have a small amount of money if you would like to start trading on a live account. You can start trading without a live account, which means demo account. For example, like in this case I have, you can open a demo account with any amount of money, $1,000, $10,000, $100,000. It is up to you, and you can completely spend that money and start again, restart, just open a new demo account, and that's all. But with a live account, you will need the amount of money to invest over your broker. Then the broker will put that money on your trading account, and then you can start trading on the live account. So these are the obstacles. There is not too much of hassle in just opening a trading account. It will be very fast in a day. Some of the brokers can do that, so you can start immediately. Now you can see why the Forex market is good. What is volatility, liquidity? There is no one controlling the market. You can trade from Monday to Friday. You can make money in a second, in a minute, in an hour, while compared, for example, to the stock market, it's not open over evening, so you cannot trade. You can only trade during the working hours. Trading hours, this is some kind of a difference. So what is also good, what I have said, is that you can also make money on a small amount of price change, but you can also lose too much money. That is also something that you need to pay attention to. And that's all. I hope this has shed some of the light why to trade on the Forex, what is the reasons. And if you have any questions, feel free to leave a comment. I will try to answer as soon as possible. If you like this video, click the like button and subscribe for new videos. Share with other traders if you think this was useful, and see you next time. Happy trading.